All right, I guess it's still good morning. I'm Randy Gerber, and this is Lindsay Karas Stencel, and we're here to talk about growth with purpose for your business. One of the things, both of us have worked in the first generation entrepreneur, or I should say, I suppose, just entrepreneurial space for quite some time, and we recognize that there's the ecosystem. Number one, being an entrepreneur is a lonely thing to do, and the ecosystem, while it's improved substantially, continues to be. It's hard to find places to talk to people who understand what's going on, and so we decided. We talked about. We were the same Zoom calls regularly, and
yes.
We decided that we'd talk about growth with purpose in your business today. Housekeeping, that's right, housekeeping. Number one, put your microphone on mute, that'd be terrific. Number two, go ahead and submit your questions to the chat, and Andy sitting over here is gonna help us manage those as well, and we'll try to take them at the end. So, well, Lindsay, I'll let you go first. So introduce yourself and your background history, why you're here, and I'll explain.
Sure. Lindsay Karas Stencel. I've been in this wild west of the entrepreneurial world now for about 15 years. I was born and raised in Buffalo, New York, and then I spread my wings and finally came over to Ohio in about 2004, 5-ish. And finished out my law degree and my MBA. From there, I took a really interesting path and was asked to run a legal department, and I was an associate for a venture capital firm, NCT Ventures here in Columbus, Ohio. And that was a crazy thing because venture wasn't really even a thing in the Midwest, so there was a lot of lessons to learn and not necessarily a lot of people to teach them to me. So it was a very interesting experience. While that was happening, I fought and scratched and clawed my way up to become one of the, managing partners of that firm. And then while that was happening, I was also running my own law firm, and we can talk about this in a minute, but, I accidentally started a law firm in 2010, and I grew it from, with no marketing and really no processes, from no clients to north of 200 clients. And so that was just a very great ride, but it was a wild ride. And then I also wanted to help out my hometown, so I took a role as Chief Investment Officer for an organization called Launch New York, where we ended up running the most active seed fund in the state of New York and one of the top 10 most active in the country, raised the largest seed fund in the region's history. So lots to be proud of there, but all of that was happening at one time, and that's a lot for any human to undertake. So in March, right before the world fell apart, my practice was acquired by Thompson Hine. And so now I sit in the VC and emerging companies practice as a partner there. And I get to help entrepreneurs day in and day out get their businesses set up.
Yeah, in that whole entrepreneurial field and private equity field and fundraising field, Lindsay's a name that I've heard years ago, back to NCT, frankly. And then we met a couple of years ago at some of these joint events, and Lindsay and I share some commonality that while I was born in Cleveland, I went to high school in Buffalo, and I can say that the work that she's doing in Buffalo is unique and different and rare, and they definitely need people like Lindsay to help. I also note that if you were born and raised in Buffalo, when you say you moved to Ohio, where I say I was born in Cleveland, went to high school in Buffalo, and ended up in Columbus. So I never mentioned Ohio, but anyway. And then for those of you who don't know me, Randy Gerber, and we work exclusively with first generation entrepreneurs and help them grow their business with purpose. And my background is started in general financial planning for anybody. And in 2000, when the market crashed, realized that I didn't love working for everybody, and took a hard look at who did I enjoy working for and why? And the conclusion was I really enjoyed working for business owners and primarily. And, the market went down in 2000, 2001, and 2002. And now I'm not having any fun whatsoever. I enjoy being in the business of advice, but it was difficult. And it got really real because we had our first child, was born in 2001. And took a hard look, and I said, it's not just business owners I like working for, it's the people who start the businesses or buy them, people who are controlled. And so we made the hard decision in May of '04 to fire our most difficult clients, our 10 most difficult clients. And then in '05 decided to focus on first generation entrepreneurs. And then in 2007 made the big move where we transitioned a lot of folks off our books that weren't entrepreneurs, and here we are today. And one of the recognitions, when you think about traditional financial planning, a piece of that's investment management, right? And the big recognition was that, hey, these folks own these businesses, and that's their most important, biggest asset. And very few folks are helping these people. Particularly, you're talking about businesses that are $1 million of sales, $3 million of sales, $5 million of sales to grow the companies. And one of the things that we noticed and we were lucky because we got endorsed by the Columbus Chamber of Commerce back in 1993 to provide 401k plans to their members. So we had a lot of business owner clients, but not them themselves, but rather the company and the 401k plan. And so we engaged a lot of conversations and recognized there was a shortage of advice around how you grow your business for this size, and these size companies. And one of the things that I've noticed over time, and still this very day, that an entrepreneur left to their own devices are going to grow for growth's sake. And it is a grow or die thing, right?
Yeah, that's true.
I mean, it's grow or die. But they grow for growth's sake, and too often they grow at any rate, at any reason, and they pursue revenue, whether it's quality revenue or not. And I think honestly the pandemic has proven out this issue around this, because if you go back to 2008, we had a debt crisis in this country. When it was everywhere, it was big companies, small companies, individuals, and so what happened, right? The Fed reduced interest rates, people refinanced their debt, lower rates, shorter terms, and fast forward to 2020. A lot of these 10-year notes and 15-year notes were either paid off or almost paid off. So you roll into February of 2020, the economy is humming along, doing great, in part because people didn't have much debt, and in part they had free cash flow, right? And then the pandemic hits. And so let's talk about small businesses. The pandemic exposed small businesses that they didn't have any cash. And you kind of scratch your head and say, well, how's that possible? They have no cash because we had this economic boom the last 10 years that revenues went up. And then, so clearly revenues went up, but so did the expense structure with those revenues. And the light bulb that goes off, the proof is that, hey, they had bad quality revenue in some of this. In other words, think of it this way, that for every dollar of revenue, you want to have a nickel or a penny or half a penny end up on your balance sheet, right? And so people were just chasing growth. And the reality is, in my experience, and Lindsay's going to talk about hers, which frankly is more robust than mine in terms of sheer volumes, is that you want to grow your company with purpose, that understand the growth rate. Fastest growth isn't best. In fact, I might argue is not very good in general.
I can also argue that.
Yeah.
As a person who loves venture capital, I actually will make that argument.
Yeah. At the same time, you have to grow. I mean, the status quo doesn't work either. So it's a very difficult, in my experience, in my opinion, it's a very difficult thing for entrepreneurs to do, particularly in the beginning when you have this unbridled enthusiasm for what you're doing. I mean, you're so pumped up to have your baby and grow this thing, and you hang your shingle that you're an entrepreneur, which good and bad is a cool thing to do, because I think some people call themselves an entrepreneur and they're really not.
Yeah, and it's become sexified, and so there's all this pressure to do the sexy thing, which is oftentimes grow at all costs.
That's right.
That's not always right.
But my experience is to put a purpose and a plan to it, and it's hard, and that's partly why we're talking, because there aren't many people out there, I think, sharing this message and talking about. What's your experience with this over your?
Yeah, so I've seen a lot of people, I spend a lot of time in the venture capital space. And so the venture capital space says, raise a bunch of money, grow your business at all costs, achieve these borderline unachievable projections oftentimes, and then raise more money to continue to accelerate growth. And so, oftentimes it's putting folks on this constant treadmill of fundraising, which is problematic, first of all.
Well, and why is that? I mean, I agree with you, but explain that.
It's problematic because you're not actually spending time running and growing your business. You're spending time fundraising. And so if you're not growing your business, you're not focused on growing your business, really what you're focused on is raising money, and you're just constantly running on that clip and on that
talk
pace.
about the emotional toll of raising money.
Well, it's exhausting. So, if you've ever had the joy of fundraising, you know this, but fundraising is typically a 3 to 6 month process. Sometimes it's longer than that. You make hundreds of phone calls. 90% of them are a no, 5% of them, 10% of them are a yes, I'll learn more, 5% of that, it's 10% of that, ends up being like, hey, yes, I'm interested in this. And so you make over time, sometimes thousands of phone calls to get, $1 million, $2 million, $3 million for your business. And if I'm honest, it's kind of abusive on the psyche, if nothing else, right? Because, you
can only hear no so many times.
It takes a special breed of human to just hear no, no, no all the time and smile and keep your chin up and keep going and fighting through the day. So I think there's that. And then you think about how that reverberates into business, right? So I'm a big believer in, we have to have our core self right. And that comes from a mental aspect, physical aspect, financial aspect, and spiritual aspect, however you so define that, right? And you've got to have that core right. But if something's wrong there, it starts to create some reverberation for you. And so it starts to then echo, or that reverberation, bounces off into the rest of your life. And so when you think about how is, financial pressure, stress, mental health, stress, all of that reverberating into your business decisions, guess what? Your center's off kilter and off course. So now you're making decisions that probably aren't actually the best for your business.
Correct.
And then in turn, you're not making the money you thought you were going to make. Your investors aren't making the money they thought they were going to make. And then that creates a whole other bucket of problems.
And the reality situation with the world we live in with media and news, and everybody points to the super high growth companies, the Googles, Amazons, the companies, Netflix, even here in town, right? Root and Over My Meds. And those are great companies, and you start applying percentages though, there's so few. I mean, and the reality is, so people have a rose-colored glasses when they're thinking about fundraising. And I kind of laughed when you said you make 100 calls, you get 90 no's. I'd say make 100 calls, 50 don't return your call.
Yeah.
and 40 will maybe give you a no. And so the biggest thing that I think, and I've seen this a zillion times, that the time and mental energy and toll on your core, you're going to call it, is you're much better off focusing on operating your business. And in my opinion, my experience, that particularly for those starting businesses or growing high emerging businesses, there are tools out there through the SBA and even maybe family or friends to help you get started. And then choose a rate of growth that's sustainable. And this is not for the faint of heart in any way.
No.
And one of the other things that I see oftentimes too with entrepreneurs that's tricky is that they are willing to go with, step their toe into the unknown all the time, whether it be, hey, we're going to try this, or compensation, or whatever it may be. And as they bring employees on board, they think the employees are willing to do the same thing, and they're not at all.
No.
And the sooner you understand that your employees want certainty, the better job they're going to do for you, because they want to know they're going to work in a safe environment where they're going to get paid, even if it is below market, right? They don't want to get paid. they'd rather get paid $40,000 period versus $20,000 with the opportunity to make $20,000 in bonus, right, all day long, or even $30,000 in bonus. And so when you're, from a psyche perspective, with growth with purpose, you got to think about surrounding, from a cash flow, surrounding yourself with people who are willing to be on the mission that you're on in the business, and they're willing to take below market pay, but they want certainty around that.
Yeah.
So you can operate the business and grow it at a rate that's more sustainable. So who do you think should be, what type of person should be an entrepreneur in your opinion? Is that a fair question or unfair?
No, I think it's a fair question. I think not everybody's built to be an entrepreneur. I think there's certain folks that they're just not wired to be an entrepreneur. Folks that, love a very certain steady paycheck, folks that want to shut down at 5 o'clock or 4 o'clock in the afternoon and go home and not look at their email or not even have a work email. You should not be an entrepreneur. I would say, I think folks who should be an entrepreneur, typically for me, they have 3 key qualities. They are going to be highly passionate about the business or goal that they are pursuing. And that passion is not money, okay? Because that wears off after a period of time, because it's really easy to hit that monetary goal, assuming that you have a process and a plan. And then you hit it and you're like, oh, well, I hit it, what's next? And then you just kind of keep on this crazy pathway. And ultimately you lose steam. So passion is key. That's going to drive you through the really dark days of entrepreneurship.
They're there.
There's a lot of them, and I'll come back to that in a second. The second thing is grit. And so I classify grit as a sexy word for hard work, but it's something that you kind of have it or you don't. And it's the willingness to work around. If someone puts a roadblock in your way, how do you work around it? How do you climb over it? How do you drill under it? Because your ultimate goal is to fulfill your passion and your goals and your dreams to, grow and run your business. And so not everybody has that. And if you don't have that innate ability to problem solve on your own without nagging people for an answer, you're probably not built to be an entrepreneur. And the third thing is adaptability. Your world is going to change hundreds of times. I mean, see generally the last 9 months of our lives, right? Like you have to be adaptive to the environment that's around you. You have to read that environment. You have to make smart business decisions that fit within your plan and fit your mission so you can continue to grow. And then I'll say this, I always think entrepreneurs are a little bit off, they're like a half step off normal. And the reason I say that is because it is a dark and lonely road sometimes when you're an entrepreneur. When you're the founder of a business, the CEO, and all things are resting on your shoulders to make sure that you're growing the business the right way, and you've got 50 people on your team and you need to make sure they're paid every 2 weeks or whatever your schedule is. And you don't have a lot of people around you maybe who've been through this and who have done this before. So you don't have people oftentimes to call, except for maybe advisors, right? And so you end up in this very dark place sometimes where you have to be able to pull yourself up and out of that and continue to drive at that passion and be gritty and adaptable and be positive. And all of that is really hard. I'm just going to say that.
Well, and on that topic, one of the things I've seen, when I keep saying how being an entrepreneur is a very lonely place, in part because what happens when you hit those dark days, and when you have bad luck or bad things happen to you, and they do, you go seek advice. So often you seek advice from people who love you and care about you, but they give you the wrong advice.
100%.
Because those folks don't want to be an entrepreneur. And sometimes, they unintentionally reflect on you, like, don't do this. Actually, I don't want you to do this because I can't do this, right?
100%. And they just don't know what advice to give you. They honestly don't. They're well-intended, but they're oftentimes giving you the wrong advice. So you have to then figure out who is your mentor circle.
That's right. And it's important that, when you're talking about growth with purpose, one of the, I can twist the definition of purpose a little bit, is have people around you who understand first-generation entrepreneurs, understand growing your company, who've actually done it before. It's a purposeful choice. So many times people go get business leaders that maybe had a big job at a Fortune 500 company and they ran divisions. However, the reality is they really never started from scratch. They always had resources, whether it be financial resources, people resources, mentoring resources that were all around them. And that's a mistake because that person, generally speaking, just doesn't understand what it takes. So.
100%. And I see that in the entrepreneur world. I see it in the people who want to start their own venture funds world. They look at these people who've come from, their dad was a venture capitalist, they become a venture capitalist, and then they just, they've been in this for years and years and years, and generationally. And then, I see these VCs go and talk to these folks and say, oh, well, what do I do? And these seasoned VCs who come from generations of previous VCs before them, they can't even articulate, what it is that they need to do at a grassroots level to try to get this thing started. And they're just like, well, just, call your fund administrator. That's not how this works. Like, you still need to build your business. You still need to grow it. So it's just it's very wild. Yeah. It's hard to find those people
it's very hard.
That you can trust too, because I think the other thing, and you've probably seen this, I don't know, hundreds of times, not all advice is good advice, even from folks who've done it before.
Oh, no, yeah. No, the purity motive really matters, right? And so it's difficult. So one of the things that I want to ask you, and it's because you've seen, how many deals over your lifetime have you seen, you think?
Greater than 1,000. So we kind of stopped counting when we got to 1,200. We were just like, what, I think.
Right.
We could probably figure it out, but.
So how many of those deals didn't have any strategic plans?
I'm hesitant to say this out loud, but it's probably in the 80 to 90% range. They have general plans.
Right.
And they have, I would say, 15-month plans, but they don't have 3 to 5 year plans or 10-year plans. And so yeah, it sort of goes back to what we were talking about earlier. It's like, well, I'm going to fundraise and then I'll solve the problem.
Yeah. And how many of the deals you've seen have you seen actually exceed the plans that were presented to you?
Very few.
Okay.
I would say I'm talking like in the 5% or less bucket, and some of that, we saw because of black swan events like a COVID, where people were just in the right place at the right time. They caught that tailwind and could go. That would have never been predictable.
Right.
But the folks who are really big on their process, and almost annoyingly so, those ones are the ones that do tend to exceed plans.
So, and then those people who are, I'll go with it, exceedingly annoying in the process, were their plans more realistic to begin with?
They were still hard. I think they were lofty goals, but not unachievably lofty. Like a lot of times in my world, I see these plans where people are like, I am going to have 335% growth next year.
Yeah.
Not really a plan.
Yeah.
It's just gonna have 335% growth. What's your plan? Make $1 million like this. That's what I see a lot of times. And the folks who do have plans, look, there's still stretch goals involved here, but they have to block and tackle and do everything right. And everybody in the organization is doing that.
Okay. And so, and I have my own opinion on this, I'm curious, why do you think, and I see the same, I completely agree with everything you said. Why is it you think people continue to develop these unachievable plans? What in the ecosystem is happening that people time and time again have either no plans or plans that are completely not realistic?
I think part of that is really a function of, the hype that comes behind fundraising. People are told, well, if you want to make this attractive to the biggest and best VCs, this is what you need to show them, and you need to do this. And so people get caught up in not playing their game, and they play the game that may or may not pan out for them based on what some other people are telling them. And so I think part of it is hype. I think part of it is just bad advice, because, not all advice is created equal. And so, if you read a bunch of books and you see on the internet, like, hey, I've got to grow 2x year over year to be attractive. You think I've got to grow 2x year over year to be attractive, and gonna figure out how to do that. And so I think it's a function of outside pressures where people don't go, this is my world. And they stay in their world and they play their game and instead let other people dictate their game.
Yeah. And on that topic, I'm glad you said that because even though it's not consistently aligned with this presentation topic, the advice issue I always find interesting because I see this all the time, which is why we developed our holistic model around advice. Is that an entrepreneur will ask somebody a question and they don't provide context around, or at least enough context. And so you'll get somebody who's completely qualified to answer the question, and they do answer the question that was asked, but the reality is the wrong question was asked, or there wasn't enough context provided around it. And that's one of the things that I think, back to growing your company and again, being purposeful around this, that whatever mentorship you have, whether it be a mentor, advisory board, or just one-on-one conversations, that as an entrepreneur, you really have to be very careful. You have to be deliberate in how you frame your questions you're asking and make sure there's plenty of context that the person you're asking for help can give you an answer that's actually helpful.
Yeah, and I call some of this, there's different levels of customer discovery depending on who your customer is, but it's very much along the lines of customer discovery because you can't figure out the proper answer if you're guiding someone towards the answer that you want. Like say you're trying to figure out, should you take this loan or should you not take this loan? But you're framing the question in a way that's basically giving people a beach ball to say, take the loan. When they have no idea what's happening in the rest of the organization. That's exactly right.
Right. So talk to me a little bit about your position around equity as a source of financing versus debt.
Yeah, so.
For most companies, not the exceptions, but the general mass.
The general masses, so we're talking like more standard small business, like not a venture-backed business, okay. So in that context, absent having some sort of partner who's truly a partner and who's contributing something more than just dollar value, I think you have to be really careful about just, issuing equity to parties that may or may not bring you any level of help and value. So if you can take on debt, that's non-dilutive capital, meaning you get to continue to hold, a super majority of your chips. I think that's really beneficial. Look, having some sort of employee stock option plan or profit sharing plan with employees, I think that's always valuable because it keeps people all pulling on the same rope at the same time in the same direction. But, at the end of the day, people do want, certainty too. Like they are going to take a job because they go, hey, I can feed my family on my salary. I like what I'm doing and I like the people I'm doing it with. If they can continue to grow your business with you and make more, sure, they're going to do that if they buy into the passion and whatever. So I think that's a value. But yeah, you have to be really careful with equity offerings, particularly if you're in what I would classify as a more standard small business. And I think sometimes people don't think small business is they think it's not like sexy of another term.
Yeah.
People who have small businesses can make, $50 million a year top line revenue and clear a lot of money in margins.
That's right.
And that's still a small business, not venture backed.
That's right.
And you control your own destiny when you're doing that. You're not following the whim of whoever's telling you to grow and hitting their metrics, you're hitting yours. And so, equity financing in all businesses is not necessary. And I'll say this too, like only 5% of businesses get venture capital. 0.5% of businesses get venture capital. So like everyone thinks they should get venture financing or institutional financing. And it's really not the pathway for most people.
No, it's funny to say, a small business, we have lots of $30 million businesses that if you think about it, if you make 10% of your money, that's $3 million a year, which is an awfully nice lifestyle, no matter.
That's a pretty sweet lifestyle.
No matter how you got it. One of the other issues with equity, Lindsay, talk to me about this a little bit, and maybe I'll frame the context.
Holistic question asking.
So, from a psyche perspective, back to that company that's a small business that when you take on an equity investor, the perception is you have to grow quickly. Whereas when you're using debt, you get to choose your rate of growth.
Sure.
And so talk to me about the psyche of what happens when you take on, and the expectation oftentimes in your experience, what that equity investor places on the entrepreneur.
Yeah, so oftentimes the investor, they're giving you money for an equity position in a company, and they have an understanding that they're gonna get out of that equity position in, say, like 10 years or less. But they also have an expectation.
Which is a real time frame, by the way.
Yes.
10 years or less is a kind of a.
Oh, yeah,
That's not an
usually
accident.
they wanna see like 5 to 7 years,
Right.
but 10 years is the life cycle of a fund, for example.
Right.
Maybe some extension periods, but let's just call it 10 years for easy math. But in that period, they want to see, oftentimes 10x growth on their money that they invested. So if they gave you $1 million, within 10 years, they want $10 million back out. And so when you think about that, and that's what their goal is, now think about how they're pressing that on you, whether, directly or passively aggressively or very aggressively, whatever it's going to be. But they're going to push that on your business. And, just said very directly, that might not be the best thing for the business, because the business is going to take on some of that revenue that maybe they didn't want to take on, or maybe, they're going to take some of these, they're going to make some bad decisions because they have to achieve these goals that someone else is setting for them, as opposed to the goals that they are setting for them and pushing. Because you might say, you take on some debt and you say, hey, I'll have to lay some foundational groundwork. That's why I'm taking on this debt to build up a little bit of whatever systems, manufacturing plant, whatever it's going to be. And that's not going to start to churn for 3-4 years,
Yeah, right.
really, really well. But after that, that thing is just humming.
Right.
But that's not what your investor wants to see. Your investor wants you to build your plant in like 3 days and then start humming. And that's just not real.
Right.
And so it just creates these very bizarre dynamics, but then also creates a lot of pressure and poor decision making, or maybe not true to that business's decision making. I could say it a different way.
Yeah. That's where, I think that, again, aside from the time, the pain of raising equity capital, back to growth, that when you bring on that equity capital, that you do get the pressure, and you as the entrepreneur, you better still have a majority stake or a big stake in the business, right? You're immediately misaligned with that person, because you're gonna, and particularly if you're passionate about what you're doing, because you want to do it the right way and not necessarily the quickest way. And so when people ask, well, what should you do? What should you do? And in my opinion, in my experience, you really have to sit down, that if you're starting a business or buying a business, or let's say you have one and you're trying to figure out how to grow at what rate, you really need to sit down and ask yourself some super fundamental, super root issue questions, like, why am I doing this? What is the point of it when it's all said and done? Mm-hmm. And oftentimes there is passion around whatever it is they're doing. Virtually always, that our clients who are first-year entrepreneurs, they want to end up helping other people in their organization. They want to sit in the visionary seat, the seat that say, hey, where are we going, and how can I make my employees' lives better, right? And there's some financial considerations that go with it that are so it's extreme, I guess, relative to other Americans who want to make a lot of money. But when you think about that's what your real vision and goal is, then your rate of growth is completely misaligned with that equity investor.
100%.
And you should tie that, because it gets a lot simpler, there's a lot less pressure, it's easier to communicate to everybody, hey, here's what the plan is. We're not going to grow at 40% per year, we're going to try to grow at 10 or 15 or whatever it's going to be. Now, that's in my opinion, for the bulk of people. There certainly are those companies that are special and different.
Oh, yeah. And some companies, that's actually how they grow, because they're feeding a technology beast or something. Right. So the more you can spend on technology development, you're not actually adding a bunch of humans, so margins tend to increase over time. And those we call unicorns for a reason.
Right.
Not just because they're $1 billion or greater in valuation, but they're unicorns because you don't see a lot of unicorns in real life. So they're magical.
Yeah, they're magical, yeah. And so it's, and that's what makes this space exciting, because you always have the possibility of what if, what could happen. The problem is so many folks spend that time in the extreme versus, hey, I can make a few $1 million a year, provide a phenomenal product for my customers and clients, and provide a phenomenal lifestyle for my employees. That sounds like a pretty good life to me.
Yeah, I mean, and let's distinguish that too very quickly between what you often see in a startup where you're not making that $1 million a year salary in a high growth startup. I mean, you're making substantial, sometimes nothing.
Enough to get by.
Yeah, sometimes.
Yeah.
And sometimes not even that, if people are gonna go without pay because you run up against a wall and you're not gonna make payroll, it's oftentimes the founders and the core team that doesn't get paid, so the rest of the staff can.
Right.
And so.
Because they didn't sign up for the risk.
They didn't,
Right.
and they're not equity compensated for
That's
the
right.
risk on the backside either. So, I think that is a distinguishing factor there. And so some people too just would rather see a couple $1 million a year in salary and think about what you can do with that if you build that, as opposed to maybe I will make, hundreds of millions of dollars if.
That's right.
So.
Do we have questions, Annie?
I do have a few questions.
Cool.
Yeah.
All right, so from James, he asked, of the businesses missing strategic plans, which portion of the plan is most commonly missing or inadequate when they do have a plan?
It's a question for you.
Oh, sure. So I think, some of them actually just don't have what I would classify as starting to look into more of a long-term vision. They have a very short-term vision that they're thinking about. And that's usually something like, 15 to 18 months. And then they say, oh, and then we're gonna raise more money and we'll do some things after that. And then they make statements like, well, when we raise that money and if we hit our milestones, then we can make plans from there. And so that to me just kind of makes me a little bit nervous because I don't actually know what their 3 to 5 year plan is. So even as a venture investor, that scares the heck out of me because I'm like, well, if you don't know what you're gonna do in 5 years, how do I know that I'm maybe gonna get my money back? So I think that's a big one. And I think the other big problem that I see a lot of folks have is they're not able to distill down their big picture strategy into, 3 to 5 bullet points that every single person in the entire organization can go, why am I doing this? Even the janitor at NASA said, when Kennedy asked, what are you doing here today, sir? And as he's mopping the floor, he said, I'm helping to send a man to the moon.
Yep, right.
Like everybody has to believe it and everybody has to buy it. And if, you go out on the floor and you ask someone why they're doing something, and if their answer is, to get paid or whatever, we probably have a problem.
And what I've seen in the past, and I don't see that, I see 15, 20 deals a year maybe. People get stuck in spreadsheets that there's no strategy to the strategic plan, but rather it's a mathematical formula saying, hey, here's how we're gonna grow, here's what's gonna happen. And they're not thinking about real life events and this the whole notion of even going from like the idea of moving spaces from one space to the next, relocating, it's hard, it takes a pause. And so it's just not sustainable. There's very little, I guess what I see missing for strategic plans is strategy, is the key thing, so.
I have another question.
Great.
From Sarah, she asks, my business is in genealogy, family trees, antiques and knitting. What would you say are good ways to grow my business as I am just starting it out? I have a Facebook page, a website, and a blog. I feel like it may be an older customer niche. Any advice?
Well.
Take it or you can take it. I'll let you go first this time.
So if you're just starting out, that was part of the question, right? Just starting, yeah. So in my experience with this, I think you have to tell everybody in the world that you simply can't lean on your natural network of people enough. Because you just don't know. And that's, by the way, if I heard it correctly, a pretty broad list of products and services you sell. So, one thing I might think about is narrowing it down, because it's hard to have a broad range of things to sell right out of the gate. But back to the natural network, and I tell people this all the time, that hit your natural network as hard as you can. What I mean by that, sit down, call them, Zoom them, explain what you're doing, and then ask them who else you should be talking to. And I can't tell you how many times, and that's why I started my business, by the way, almost 30 years ago, but I can't tell you how many times that people end up finding the right person, with the whole, what's that, the 6 people removed, who's that guy?
Oh, yeah, you're 6 people removed
Kevin
from someone
Bacon.
on the other side
Yeah.
of the world or something.
Kevin Bacon, right?
Oh, yes.
And so that's, I find that to be very, very real to this very day. And you'll stumble across people who want your product or service. So what's your?
Yeah, and I think that's right. And I think maybe thinking about blocking and tackling through, it sounded like 3 distinct lines is what I kind of heard there. I might start with some customer discovery too, besides, trying to grow your business. I might start with some customer discovery, trying to discern, which of those do you think is going to be most desired by the marketplace, so that you can start to think about that and building that line, and then, maybe build the second line and the third line. Because it sounds interesting and fun, but at the same time, trying to think about genealogy, it's a totally different way of thinking about the world than maybe like selling knitting products or knitting, presses or whatever that's going to be. And so, I would say sometimes less is actually more.
Totally.
And so, taking it, distilling it down, growing one thing. And look, there's nothing that says in 2 years you can't add a new line or another line. But, I would slow down to speed up.
It's funny, back in when we made the transition, the first generation entrepreneurs, the thought hit me in 03, transition began in 05, the rebranding happened in 07. And I had this idea for this online business related to it, and it only took me 13 years to get it started. So we launched it, and it's interesting. I mean, we launched it because of COVID, and it's been something that's been beating around in my head. It's been in my strategic plan for every year. It makes it, but never did anything about it. And COVID accelerated it, and in hindsight, regret we didn't do it sooner, frankly. But are there more questions?
That's all the questions I have for now.
Good, okay. Well, we're about 50 minutes anyway, so any final thoughts, Lindsay, that we want to?
Yeah, I would say when you're thinking about starting your business, it's your business. It's not everyone else's business, it's yours. And so I think you have to think long and hard about why it is that you're doing this. Are you passionate about it? And, do you have the capacity to undertake something that's going to be really, really hard, but could be really, really fruitful? And so, to kind of sum up everything that we talked about here, without process, there is no progress, in my opinion. So I think you need to really distill down, what are your processes? How are you going to do things? How are you going to think about growing your business, and reevaluate that frequently? So, and just because someone wants to give you money doesn't mean it's the money that you should take.
Okay. And I know that there's apparently another question just came in, but along those lines, I love what you just said there, because not only is it your business, which is important to remember, I will tell you in my experience, your business will not grow unless you're 100% in. So for those of you who are doing it on the side or dabbling, you're wasting your time most likely. So what's the next question, or last one?
So this is a 2-part question from
Uh-oh.
Pete. As small businesses grow quickly, they tend to backfill gaps and voids as things continue to progress. How do you recommend establishing processes and procedures for the company after the fact? For instance, we started to hire employees before we had an employee handbook. Second question, how do you?
So stop right there.
Yeah.
That's super normal, by the way.
That's how I built my law firm, in fact.
That's super normal. There are a lot of processes and systems that you have to backfill. In fact, I was invested back in 2006, substantial, I mean, six-figure dollars into a business. In fact, I put a day a week into it at the time. And it was interesting, the person who I love dearly as a friend, and he's a serial entrepreneur, he spent a lot of time in the processes in the front end. And we, you know, and the revenue, he took the opposite approach of take the processes on the front end and pursue some revenue. That came out wrong. That processes were equally important as getting new business, right? And it ended up failing. And I often reflect back at that time that he spent too much time on the processes up front. So it's this delicate balancing act, and that's exactly what it is, a balancing, you know, think teeter-totter, that something goes up, something goes down. You do have to have, if you're not raising equity capital, you do have to have revenue. You have to sell something.
You have to make money.
And you're, you know, and hopefully, you know, those employees you're hiring, I'll say it differently, screening your employees for hiring for some uncertainty. There aren't going to be handbooks. There aren't going to be, you know, emergency protocols. I mean, you know, and people are going to have to adapt and learn as they go. And then as time goes on, you as the shareholder, you as the entrepreneur, you do have to fill those gaps. And so when I heard the question the first time, my first thought was really listen. Listen to your customers, what they need. Listen to your employees, what they need. And if you can't tackle it right now, acknowledge the issue and tell them when you're going to tackle it.
Yeah.
You know, particularly as a small business. The second part of the question.
You may have kind of touched on it already, but how do you recommend implementing these procedures while your team is already established?
Yeah, I mean, it's if you have a team working for you and they're staying with you, they believe in the mission too. I mean, the number one reason why people go to work for a company is the mission the company is on. The number two reason they go work for a company is the quality of people around them, okay? And so if you have people working for you and they're happy, they're on your team, and you just articulate, communicate when you're gonna address these issues.
I'm sort of tell them what you're going to tell them, and then tell them what you told them. And so I think over communication a lot of times is going to be key as you're, you know, a lot of times when you're an entrepreneur, you're building the plane while it's already in the air.
Right.
You know, you've got a cabin and you got an engine.
Right.
You don't have all the other parts. And so you have to figure out like what are the next most important parts and build those out and prioritize it.
You know, it's funny, you use the word over communicate. I actually really feel, particularly if you have a team, so you have more than one person, there's no such thing as over communicate.
That's fair.
You know, because people hear things differently at different times, different ways.
Yeah.
So
I think that's very fair. And so, you know, sharing the message lots of times.
Yeah, right.
I guess it's over communicating for you because you feel like you're supposed to be saying it like
Well, that's
hundreds of times.
yeah, you feel like you're saying, I just said this 10 minutes ago.
I just said this and I'm like a robot. I'm just like repeating myself, but it's to different people, it's to different audiences.
Correct.
So, yeah, very true.
Anything else, Annie?
I think that is it.
All right, well, thank you for participating today. Lindsay, thank you so much for coming in.
Thanks for having me.
Always
This is
good to see-
great.
Yep, enjoy it. Good luck in your pursuits of entrepreneurs. Really take to heart the thought of growing your company with purpose, and hopefully you can align your, you know, why you're doing this in life to your mission and your goals and your business. And we want to see you successful for sure. Happy holidays for everybody. Today is the first day of Hanukkah.
Oh, yes.
Yep. And finish this weird 2020 year strong. Goodbye.
Thanks, everyone.